Well, we've been talking about the equity markets. Let's shift focus to the currency and the commodity space. Manisha Gupta joins us to give us all those details early this morning. Hi, Manisha. Good morning.
Morning, Nigel. Thank you so much. Well, much of the cues really seem to be coming in from the U.S. and China trade talks and the impact on currency as well. So if you look at the U.S. dollar index, that has continued to decline. We have seen the euro rebound from a 3-week lows. Australian dollar is trading at a 5-week highs. We also have seen the pound sterling gain up as May seeks Brexit compromise with the opposition leaders. So everywhere that you look, we have seen the high-yielding and the emerging market currencies gain up. The U.S. services sector has hit a 19-month lows in the month of March, and that hasn't augured well for the U.S. dollar or, for that matter, the index as well. In the commodity markets, we have seen, as I said, the prices take support from the U.S. and China trade talks. So the metal prices have continued to surge up. The impression that the China will buy more U.S. commodities, including soybean, including energy products, has been supportive for many of the metal prices, where you have seen Shanghai actually open 0.25% on the higher side for most of them. What hasn't done well today has been the crude oil prices as the U.S. weekly inventories surge. The API data showed a possibility of decline in U.S. inventories, but when the U.S. Department of Energy released data last night, we have seen 7.2 million barrels of an increase in U.S. commercial inventories. That has led to some profit taking. But even with that, the OPEC-led cuts, the U.S. sanctions on Iran and Venezuela are expected to support the prices. This is the reason you haven't seen a complete decline. It is just a profit taking and much deserved because the prices had been rising every week of this year.
All right, thanks a lot for that, Manisha. But Mangalam joins in now to take us through all of the cues from the F&O space. Good morning, Mangalam.
Good morning. So, ahead of the F&O expiry, there is a lot of data points to ponder over. The fact that yesterday we ended off record highs for all the indices. At the same time, it is ahead of the big RBI policy outcome. Today, the FIIs, they sold about 1,040 crores in the cash markets in yesterday's trading session. The largest sell that we've seen in a while, over a month at least. In fact, the biggest substantial sell that we've seen in the last 30 odd days. Weekly options expiry, all of that put together. So the cues are fairly mixed. But one data point that really stands out is the fact that the street is paying top dollar for the Nifty April futures. Nigel, you and I tracked this data, and 86 points premium looks unusually high, and we saw that rise in yesterday's trading session. Come the data, we saw some purchase in index futures by the FIIs, and the 1,000 crore sell in cash market seems to have been mitigated by a 1,300 crore purchase in stock futures. So that is something we'll definitely keep an eye out on. In index futures, now yesterday, remember, during the first half of trade, we hit the record highs. So maybe there were some shorts who unwound their positions, and from there we came off. So maybe some longs unwound their positions as well. However, one thing that also stands out is there is a fair amount of protection buying. There was unwinding in long calls and index options, while the FIIs added close to 14,800 long puts. The SGX Nifty indicates a mild green start up until the RBI policy. However, will be interesting to see what happens after that. Do we go ahead and cross yesterday's record high of 11,761, or maybe breach yesterday's low of 11,629? 11,650 call has seen a fair amount of writing, so 11,700 becomes an important hurdle to watch out for. Nifty Bank, out there is a lot of interest, given the fact that it's Nifty Bank options expiry. The spot is at 31,000 thereabouts, while the maximum open interest on the lower side is the 30,000 put. So that is something we'll watch out for. In terms of stocks, Jet Airways enters F&O band once again, and we have a lot of short writing on Amara Raja batteries and the oil marketing companies.
Okay, all right, Mangalam, thanks so much for that. On that note, though, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.